Hi stock investors, JJ here. Welcome back. Well, has Tesla and Elon Musk been involved in stock inflation fraud? That's the allegation, along with many others in a new lawsuit. We're going to look specifically at stock inflation fraud. Have they been pumping the stock for a long time? We're going to get into that. In this episode, we'll first look at the Tesla stock inflation fraud overview, the case at hand, and then how the fraud is linked to Musk's huge compensation plan, which has been in the news recently, and Musk lying in public to justify revenue recognition. That's an important one. And allegedly fraudulent stock price targets, and that one involves Cathie from ARK. So let's get into it. This is the case itself, the legal document from Plain Sight, and it is Greenspan versus Musk et al. In the California Northern District Court. You may or may not have seen my previous episodes on this case. I'll leave links in the description to those if you want to go back if you haven't seen them. First up was Enron scale Tesla Elon Musk fraud alleged in lawsuit. That's an overview of the whole case. There's a lot of fraud alleged there, and it's Enron scale here because Tesla is 20 times the size, the market cap of Enron. Then I did 2 episodes focusing on full self-driving fraud alleged. It was 2 episodes because there's a lot of full self-driving fraud and autopilot fraud alleged there. Now, this is the part of the lawsuit that involves stock inflation fraud. As you can see, it's extensive. That's why I've picked out a few just to focus on today to keep this video at a reasonable length. Let's start at the beginning, and this is also how the fraud is linked to Elon Musk's huge compensation plan that's been highly controversial and in the news quite a lot lately. The Tesla stock inflation fraud. This is from the 201-page January 30th, 2024. So this year, post-trial opinion in Tornetta versus Musk et al. In the Delaware court. You might have heard of this case. Now, was the richest person in the world overpaid? That's Elon Musk, of course. The stockholder plaintiff in this derivative lawsuit says so. He claims that Tesla Inc.'s directors breached their fiduciary duties by awarding Elon Musk a performance-based equity compensation plan. The plan offers Musk the opportunity to secure 12 total tranches of options, each representing 1% of Tesla's total outstanding shares as of January 21, 2018. For a tranche to vest, Tesla's market capitalization must increase by $50 billion, and Tesla must achieve either an adjusted EBITDA target or a revenue target in 4 consecutive fiscal quarters. And this in bold here, with a $55.8 billion maximum value and $2.6 billion grant date fair value. The plan is the largest potential compensation opportunity ever observed in public markets by multiple orders of magnitude. 250 times larger than the contemporaneous median peer compensation plan, and over 33 times larger than the plan's closest comparison, which was Musk's prior compensation plan. So a huge compensation plan here, and Musk stood to benefit a lot from this if those massive targets were met. This post-trial decision enters judgment for the plaintiff, finding that the compensation plan is subject to review under the entire fairness standard. The defendants bore the burden of proving that the compensation plan was fair, and they failed to meet their burden. And so this was controversial, this decision here, and it led to things further down the line, which I won't discuss today, but you might know all about what happened there. Now, that January 2018 date that was mentioned there, the shares at the time were 23.33 split adjusted around that date. And you can see that was before the huge rise in Tesla stock that happened, a massive rise in market cap and share price after that. Now, it's alleged here defendant Musk's unprecedented 2018 executive compensation plan, whose 12 total tranches of options depended on defendant Tesla's stock going up precipitously to vest, provided him with an unprecedented incentive to commit securities fraud. And we can see here the stock from that first date mentioned to the peak. It's gone down since then, but it went up over 1,600%. So the stock really took off, and there was an incentive for it to do so from Musk's point of view. Now, it's alleged here in this lawsuit that in response to that incentive, defendant Musk did in fact commit securities fraud many times over, ultimately becoming the wealthiest person alive, according to press reports. The stock price here, we can see from that first date until just now, recently, it has come down quite a lot, but still it's up over 850% since that date. So a massive market cap, still a massive rise in share price. Now, in response to defendant Musk pressuring his executives to commit securities fraud on a routine basis for years, and especially the years 2018 to 2021, late 2021, remember, was the peak price of Tesla stock, dozens of executives quit their employment with defendant Tesla over that time. And I have been reading the biography by Walter Isaacson recently, and Elon Musk does fire employees routinely. He has got a temper, and he does like to fire people on a whim, even those that have been there for a long time and those with a lot of skills, but also people have left because it's a tough work culture. He is a tough boss, and people do leave regularly as well, executives and lots of others. And this article, this headline is from earlier on this year in April. Tesla cuts 14,000 workers. 2 executives resign at the same time. Rohan Patel, head of Tesla policy and business development, posted on X he was leaving Tesla after 8 years with the company. Tesla executive Baglino leaves as Musk loses another top deputy. Next, Zachary Kirkhorn, who later quit, and there's a headline about him quitting. Tesla finance chief Kirkhorn unexpectedly steps down, and it was unexpected at the time. He was previously defendant Tesla's chief financial officer, despite having little experience in finance when he assumed the role to replace the prior CFO who had quit. Now it states here that Zach, the CFO, and others on the executive team received daily or weekly short interest reports by email from the head of investor relations concerning short seller activity. Now it's alleged here defendant Tesla manipulated its balance sheet, statement of operations, otherwise known as profit and loss statement, and statement of cash flows in a variety of ways, including but not limited to complex accounting fraud and overt market manipulation. Defendant Tesla also manipulated material proprietary metrics relied on by investors, the media, and analysts that did not directly appear on its financial statements. In this way, defendant Tesla defrauded the market, artificially inflated the price of its stock, and harmed short sellers such as plaintiff, who justifiably expected the stock to go down. And there were a lot of short sellers that expected the stock to go down given the situation of the company. And here we have an article, Elon Musk blasted short sellers as bloodsuckers. Bill Gates, Big Short star Michael Burry, and other top investors have bet against Tesla. Now you might remember at the time, if you've been following Tesla, this happened. There were a lot of short sellers expecting the stock to go down, including these big names, these high profile investors, and Elon Musk really did not like the short sellers. Now, as I've said in a previous video in this series, these are some notable short sellers. David Einhorn, a high-profile value investor who was shorting Jim Chanos, who was involved in uncovering the Enron fraud back in the day. Bill Gates, who needs no introduction. Elon Musk was furious that Bill Gates was shorting Tesla, and Michael Burry as well, involved in the Big Short, one of the short sellers in the Big Short. So these are very prominent investors who were expecting Tesla stock to go down after it went up so much very quickly. Now on to the next point, Elon Musk lying in public to justify revenue recognition. It's alleged here. Now Aaron Greenspan, who is the plaintiff, it's his opinion here that this is one of the most blatant and obvious violations of the law in this case. He said so in this recent Q&A on his YouTube channel, Plain Sight. Now, it's alleged accounting fraud, lying in public to justify revenue recognition. Like many assets, gas and electric motor vehicles depreciate in value over time. During an April 12, 2019 podcast interview, defendant Musk stated, I think the most profound thing is that if you buy a Tesla today, I believe you are buying an appreciating asset, not a depreciating asset. And here's a headline from earlier this year. Elon Musk claimed Teslas would appreciate in value post-purchase, but predictably, they've lost value. Now, the lawsuit goes on, alleging upon information and belief, this statement was intended to allow defendant Tesla to recognize revenue and therefore boost reported profits by affecting lease accounting for certain leases whose profitability depended upon whether the final resale value of the vehicle exceeded the buyback price determined in advance. In sum, if defendant Tesla insisted that its vehicles were appreciating in value, it could potentially record upfront revenue sooner. And this article from earlier this year again, Elon Musk said Teslas were appreciating assets. He was very wrong. Last year, Musk even said fully autonomous Teslas could be worth 5 times the current value. In or around April 2019, defendant Tesla was still in the period of mid-2017 to mid-2019, during which defendant Musk later admitted the company was at risk of filing for bankruptcy, providing a powerful motivation for recognizing extra value. And I've covered that in previous videos as well. That again, it was alleged to be fraud, where Musk and Tesla didn't acknowledge that they were on the edge of bankruptcy. In financial statements, they didn't flag to investors that that was the case. And this is yet another article about depreciation. Tesla Model 3 prices dropping like a lead balloon, says study. Used EV prices drop 6 times faster than gas cars. Tesla Model 3, Nissan Leaf, and Chevy Bolt EV top that list. Now, importantly, in August 2018, in a different interview referring to technology products in general, defendant Musk said, with each successive design iteration, it actually gets better and cheaper, but it's like a natural progression of any new technology, admitting that defendant Musk knew that technology products depreciate. Now, here's a very recent article from September 9, 2024 about the Cybertruck. Used Tesla Cybertruck price continues to crash. Now, the Cybertruck price actually went up when it came out. There were so few of them, they weren't making many, and people were trading them, selling them on for quite a lot. The prices for those have been coming down too, as they have for all the other Teslas that have come out. There was a case of Hertz buying lots of Teslas, and the resale value went right down, and they were not happy about that. They're selling them off. They did not keep their value, as Musk said he thought that they would, but seemingly he knew that that would really not be the case. The next allegation, fraudulent price targets, and this is the one that involves Cathie Wood from ARK. It's alleged defendant Musk and Tesla's proxies on financial media networks have long been Catherine Wood, Cathie D. Wood of ARK Invest Management LLC, and Ross Gerber of Gerber Kawasaki. Both are investment managers that have shilled for a defendant's Tesla and Musk through good times and bad, and both are invested in X Corp directly in the case of Ross Gerber, or indirectly via both funds, but via ARK Venture Private Holdings in Wood's case. Now, Ross Gerber has recently been critical of Elon Musk. I've made videos about that before. He started being more critical, not just shilling for Tesla. He says he still believes in Tesla and its long-term future, but he has been selling the stock recently, saying things like nobody's going to buy a robot from Elon Musk, and not liking the way that Musk is being very vocal in supporting Trump and being very political on X on a daily basis. He doesn't think that that's a good idea that Musk is doing that. Now, Cathie Wood, who famously touted a $4,000 per share price target for Tesla stock on CNBC, sold off a significant portion of ARK's Tesla holdings at around $320 per share in 2019, less than 10% of her long-term target price. And that's Cathie Wood and Ross Gerber there pictured. Now, Cathie Wood upped ARK's price target for Tesla to $6,000 per share at the start of August 2019, beginning in mid-October, without again changing its price target or its laughably broken model. ARK began selling large quantities of Tesla shares. Now, ARK has bought and sold Tesla over time, but having a long-term target, she says 5-year time horizon. It is actively traded, the ETF ARKK. She does have a very large price target on it, so why sell the stock? Now, this image here is a screenshot from a YouTube channel solving the money problem. That's Stephen Mark Ryan. ARK's case for Tesla stock price at $3,701 in 2029. And he's put a stock graph on the screen there showing what it would be like when the price goes up. He thinks that it is going to do that too. He is another promoter of the stock. His whole channel, every day he promotes. He's one of the stock promoters, one of the Tesla stock promoters, pumpers, one could say. So it's interesting to see what the stock graph would be like if Tesla did go up that much in that amount of time. Now, Ms. Wood claimed that her prognostications were based on models, but ARK's supposed models contain stunning errors. Now, this headline here is from ARK Invest, and it's by Tasha Keeney, this article CFA, who is one of Cathie Wood's younger proteges. ARK's expected value for Tesla in 2026, $4,600 per share. So consistently, ARK has had these massive price targets on Tesla stock, which did work out for a time when it went to the peak and it rose so much, but not so much since then. Now, the lawsuit says ARK's selling activity was omitted from Cathie Wood's media appearances, where she continued to exude optimism about Tesla and technology in general. In Q4 2019, ARK offloaded about $127.6 million worth of Tesla stock and purchased just over $4 million worth. In other words, while Cathie Wood insisted that Tesla was a screaming buy destined to soar, her funds disposed of around $127 million worth of shares net. Now, as Tesla's stock price started to go up, investors or speculators started to pour money into ARK. They had a huge amount pouring in there over the time, especially in 2020. Now you can see the stock price here along with when ARK was buying and selling the stock. You can see this is the 2020 time. Up to the peak, they were sellers, but they were buying earlier on. So they haven't just been buying and holding for the long term, even though their price targets for the long term are huge. They did buy and sell Tesla stock on the way, with money pouring into the funds over this time as the stock skyrocketed. On December 9, 2019, Ms. Wood appeared on CNBC once again to discuss Tesla. Although she was more than willing to talk on live television for nearly 7 full minutes about the Cybertruck analyzed from many different angles, her perception of Tesla's competitive advantages, her bare price of $700 market share, and the supposed fact that Tesla is not an auto company, what she did not mention was that her firm had just reallocated $100 million away from Tesla stock. In addition, CNBC displayed a screen about ARK's Tesla holdings, falsely claiming that ARK did not have a stake greater than 1%. Now here we can see an image of ARK's flagship fund, ARKK ETF. We can see it went up 246% between September 2019 and February 2021 at the peak. So it had a huge rise, but as you can see, it started to fall. And over the 5 years, it's actually down over 5 years. She talks about 5-year time horizons. Cathie Wood does all the time. So over the past 5 years, it's actually down. And this is at a time when AI stocks have been booming. That's one of their platforms, AI. I don't know how they've underperformed over the past year or two with AI stocks going crazy. Some people saying that it's heading into a bubble or already in a bubble. I haven't looked closely at ARK's holdings, but it is pretty astounding that the performance hasn't been better over the past year or so at least. Now, the lawsuit says the distribution of material, non-public information to select individuals tasked with pumping up a stock price is unlawful. Yet Wood and Gerber repeatedly met with defendant Musk privately. Gerber and Wood enjoyed perks such as exclusive factory tours, access to Musk for interviews, and special event invitations, all while they maintained a uniquely ecstatic outlook in public. Yet behind the scenes, ARK was selling weekly. And here's the image that's in the lawsuit of Cathie Wood and Tasha Kenney hosting a podcast there with Elon Musk. Now, in 2024, this was just weeks ago, the SEC and United States Department of Justice charged and criminally prosecuted short seller Andrew Left. He's a prominent short seller who publicly flipped from being short Tesla stock to being long on October 23rd, 2018 for the practice of proclaiming high price targets in public and then quietly selling his stakes, among other allegedly unlawful acts. Now that's still going on, and I made a video about this when it happened. Famed Tesla Palantir short seller charged with stock fraud. It's an interesting case in itself. Now, what do you think of these stock inflations or stock pumping claims in this lawsuit so far? Let me know in the comments what you think. Do you think they have some validity or not? Now, as I said, I've only picked out a few from even just within the stock inflation fraud category. There's so much other fraud in these other videos that I've done as well. I could go on with even this stock inflation fraud. The next would be overt market manipulation, which involved Morgan Stanley, it's alleged, and broadcasting propaganda on social media using Tesla influencers. That's the next part. If I make another video, I might do that. If there's interest in this video, I might follow on with that. But do let me know in the comments what you think of it so far, the stock inflation, stock pumping, alleged fraud here. Do you have any of the other so-called Mag 7 stocks in your portfolio or any other tech stocks? Do you find it difficult to track your portfolio, the performance of it over time? I have a special offer here for followers of The Art of Value for viewers for ShareSite, which is a portfolio tracking and reporting tool that I use myself. I wouldn't recommend anything that I don't use myself. Now, over 400,000 investors worldwide trust ShareSite, including me. You can track your portfolio by bringing in automatically the trades that you do from various brokers, not just one. If you have multiple brokers, you can bring them in. You can bring in historical trades going back as long as you like, years, to get the true performance of your portfolio. Do you know the true performance, including dividends? I'm going to put a link in the description to this landing page with the offer on it. You can also sign up for free. There's quite a few features for free there, but there's also the annual premium plan, the offer there. You can see this short video here to find out more about ShareSite on that page as well. Also, do you know about the Art of Value Patreon? You can sign up as a member for free there, but the paid membership, you get weekly investing updates. This is an example of some of the content that I share over there exclusively that I don't share anywhere else. With the paid membership, there's also access to the stock analysis secret source. There's 8 of them there so far, which are included. You can buy it separately if you want to, but it is included in the monthly subscription. Now I'll put a link in the description to that if you want to check that out. Also, if you're watching on YouTube, I'm going to put a link on the screen to one of the previous videos in this series of alleged Tesla fraud. If you want to go back, if you haven't seen those already, I'll put links to all of them in the description as well. And do subscribe if you're new here and drop us a like if you've got value out of this video so far. Thanks for watching or listening wherever you're doing that, and I'll see you in the next one.